All right, so in this video, what we're going to do is we're going to take a look at how to trade options when you have a small account like a professional. So I'll give you kind of a big key tip and insight that many people with a small account just don't do. And yes, there are many other ways and factors to trading a lot more like a professional, but in this video, we're gonna really hone in and focus on one key thing. Stay tuned. All right, so that one key thing that we're going to focus on is really about risk management. I find with a lot of small accounts, people just don't understand the risk management aspect of trading an account. They really just put a lot of money in a single spot. Even though they may think they don't, they still really do. So I'll share with you a little tidbit here about this. Now, if you want to learn a lot more, then definitely check out our website at tradersfly.com. We have a lot of great things with live classes, courses, coaching, one-on-one directly with me if you like. And, you know, we just had a recent live class with cover calls and we have a couple more coming up soon. So anyways, what I want to share with you here is as we take a look, the big key thing is really looking to manage risk first. That's really the big lesson. If you learn to manage risk, the rest will kind of fall into play. And I find many people starting out, they just don't do that. So if we kind of look at breaking down a simple vertical, what I find a common thing that most average traders do, and I'm not saying average, I'm just saying beginners or things that people don't think about. It's kind of like you don't know what you don't know. So this is where I want to open up your eyes a little bit. Maybe you've heard of this. It's to diversify, to spread your risk, but most people don't understand how to do that. They say, well, I'm diversifying by spreading my risk in, let's just say Facebook. Let's just look at Apple. Maybe it's Netflix. So they're starting to diversify this way. But what they do is, let's say here we've got Square. So this is Square. This is a position we'll have. And right now this position is looking at $406 of position to be able to make about $94. Now this is October 29th. Today is October 6th. So if we look at the duration, this is about 23 days out. Okay, just since I'm pre-recording these videos. So now if we look at this, what happens is a lot of beginners, they look at this and they say, okay, well, I got $406 at risk here. So what I'm going to do is I can put in maybe a couple $1,000s into the trade. So they'll start stacking that risk and contract number. And they say, okay, I'm going to sell some put verticals. And maybe I'll go in and I could do about 12 because I've got a $5,000 account and now I've got 4,800 on it. Maybe you got a $20,000 account, but you say, hey, I'll put in 5,000 in this one, 5,000 in another one, 5,000 in another one, and another 5,000 in another one. And that'll get you your 20 and you think you're diversified. However, you can diversify much more than just this. And I'm going to show you an example and concept here about diversification. It's called risk arrays, which we do have a live class on. So again, check out the website. Go into the courses. Go check out the live classes. That's more in depth. And here, if we look at diversifying the risk, I'm putting all my concentration of capital, all my risk at basically the 220. So why don't I spread this stuff out at different points, okay, over in these areas and start modifying the risk? So let me do 2 contracts here and just watch how we can get to $5,000 of capital in the same way. So I'll just start duplicating this a few times for you and watch. I'll do some contracts on November here and I'm going to start spreading that risk out, and I'll do some more contracts here in let's say November 12th. Okay, so I've got a couple contracts here, got a couple contracts there, and I will change my expiration date, which is, or sorry, the number of lines at expiration right here. So you could see just where all my risk is starting to be a little more spread out. Okay, and let's go in and maybe we'll do October, let's go October 22nd here, and we'll go maybe the 225. 220, we'll do something like this. So now take a look at this risk picture. Okay, so if you're into selling verticals and you like selling verticals, here's the difference. Okay, so normally a normal person's account would be, hey, I'm going to put at the 210, 215, I'm going to put in my $5,000 right there. Here, what we've done is we've taken a bit of cash, put it at this strike, which is, here's the 225. We've taken some capital here at the 220, some at the 210, and some at the 200. So at all these points, we've basically spread out our capital rather than at a single spot. So when we do have a problem, okay, at this area, only maybe part of my position gets in trouble. The other part could actually be a lot safer, and they might be totally okay. Rather than putting everything in one spot, you could see the big advantage here and the big issue that just many people would have, that if they put it all in one spot, they have a problem. So you could continue to stack this. Even this doesn't add up to about 5,000, but what you could do is just slowly spread out your capital till you reach about that, $5,000 or so. And now at the end of the month or so forth here, at the end of our contracts, we could make a bit of money, not as much as if we did shorter duration if we're just selling put verticals, but it gives you an idea and concept of, hey, how do I spread my risk out? So thinking like a professional, and even if you only have a $10,000 account or $5,000 account, still learning to spread out your capital is a wise approach. And you could just do something as simple as one contract here. You don't have to trade large. You could just do a simple one contract, and that'll allow you to spread your risk out, because between all these spreads, this spread is $400. Then what you do is, okay, well, this spread is also 400. This spread is also 400. So between all these, you're putting 400, 400, 400, 400. Now, if you're struggling with a $400 spread, you could go into smaller stocks like Starbucks and do the same thing. But learning to spread your risk is still a wise approach. So here, if I did Starbucks, I could do, maybe a 2-point wide put vertical, something very simple. And now I'm just putting up $165 of capital. So it's a lot less money than just doing, maybe a $400 stock. But this allows you to now spread out your money. You're able to spread it out. Yes, you could just do one contract here, but find something where you could spread out that cash at different points and zones. And that's where you get into thinking like a professional. Doing it on a smaller account level is actually more difficult, because it's tougher to spread out a smaller amount of sum, because you're kind of limited to the stocks you can trade. So you might need to trade stocks that are, low volatility. So maybe under $150 even. You might need to trade things with different spreads, maybe things like QQQs, IWMs, SPYs, those kinds of things. And just very liquid vehicles are also a great starting point. But doing those things will share with you knowledge and insight over time. You'll get some ideas of, hey, how do I really manage the risk behind it? And that's the point, is just if you learn to spread your risk at different points, at different areas, you'll be better off. And that's how you start thinking a lot more like a professional trader, and how you grow a small account, because you're spreading your money in different spots. I know it's a simple concept, but think deeper beyond where you're at than just, hey, different stocks or different times in the market. Now look at different strike points as well, and take it even further. Now, we cover a lot of this in our classes and so on, and the courses, so definitely check all that stuff out. And if you want to do one-on-one coaching, that's great as well. Anyways, thank you so much for joining me in this video. Hope you got a lot out of it. Remember, there's more to life than just money. Do what you love, contribute to other people, but more importantly, live life abundantly. I'll see you in the next video.